Hi, this is Jeffrey Kerr at Kerr Financial Group, and today is May 31, 2023. And certainly there's a lot going on in the markets. We just got through first quarter earnings reports, mixed bag, but in general, sales lower and profits lower than a year ago. We've got the debt ceiling debate going on, geopolitical issues all over the world. But what I want to focus on is some divergences and some unique developments within the stock market. And I'll start by going through the year to date performance for the major averages. So the Dow going in through last night, May 30th, is actually down a little less than 1%. The S&P 500 up 9%. NASDAQ Composite up 24%. The Russell 2000 up less than about around a one third of 1%. So a big difference is in that the Nasdaq, which is kind of looked as a technology driven index, the S&P, which is more of a broader market index of 500 stocks, the Nasdaq Composite 2,500 stocks, the Russell 2000, obviously 2,000 stocks, but a lot of different, wide variance of performance. So, as I found a couple of charts. We're going to attach those to this video. I encourage you to take a look at them. Maybe the picture's worth 1,000 words. So the S&P 500 for this year is up, according to the chart, at 10%. It was done last week. As of yesterday, up 9%. And if you take out seven stocks of the S&P 500, the S&P 493 is only up 1% year to date. The seven stocks are up 44%. And the S&P 500 is a market cap weighted index, meaning the larger companies have a bigger influence on the performance of the index. So, the seven stocks are Facebook and Meta, Amazon, Apple, Microsoft, Google, Tesla, and Nvidia. And just kind of going through those things on an individual basis, Meta up 18% year to date, Microsoft up 31, Amazon 31, Apple 36, Netflix 33. But the big one in Nvidia with the big spike last week is up 174% year to date. So again, the S&P 500 is being driven by seven stocks, and those seven stocks are up 44%. The rest of the stocks combined average up 1%. The second chart shows the number of stocks beating the S&P 500 performance. Again, a gauge of how concentrated the leadership is, and it's back and forth, as you see when you look at it, kind of an oscillator type movement back and forth. But as you see in 2023, there's the lowest number of components beating the index since the dot-com bubble. And so that's I think not a great sign, and points to the risk of the narrow leadership. Now, of course, the leadership, the rest of the gang could catch up to the leadership, and that could happen. But historically, it doesn't appear that that's really what happens. So we have also I think some slowing economy. The Fed, as of this morning, I'm seeing 71% expectations to the Fed to raise interest rates again in June, in the middle of June. The Fed has raised, 5 percentage points, 500 basis points in 15 months. A month ago, we were talking about the expectations of a pause and maybe hopes of the Fed cutting. That doesn't appear to be happening. And, I think that's going to weigh on the economy. Another issue is the inverted yield curve. This precedes a recession typically. And not only is it inverted, but it's inverted by 77 basis points, which is a 3-month high. So again, pointing towards problems in the economy. The commodity index. You would think that commodities might be up, as more demand for copper and various base metals and like that, lumber and farm commodities, soft commodities. But the CRB index, a wide index, is down 5.5% year to date, and in the last year is down 19.5%. So again, just wanted to point out that these, the market headlines, it kind of looks like, well, we're going to be entering a new bull market, and there's some of the narrative out there, but there are clear signs that all is not well in the stock market. The bond market is, the yields are coming down, which again is a sign of maybe slowing economy. There's some debt ceiling machinations in there too because of hedging on a default and like that. So I think there's a lot going on, a lot of cross currents, and so just to be aware of what's going, the different components and where we are across the markets. Please call or email me with any suggestions or questions. You can help kind of, we'll go through this in more detail. Thank you for listening. Goodbye.